Good day Forex trader. Your USD Forex Signal, buying below $1.1300. There is a potential pivotal point at $1.1315. Last week's Wednesday your USD signal was not triggered as there was no bearish price action when the price first reached the resistance level identified at $1.1303. Today's your USD signals. Risk 0.75%. Trades must be taken before 5 p.m. London time today. Short trade idea. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1394. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1315 or $1.1261. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD Analysis. I wrote Wednesday last week that the technical picture was still very consolidative but a little bearish. I thought that the price was quite likely to remain between $1.1250 and $1.1302 over the course of the day with uncertain direction, so I thought that scalping any reversal from either of the aforementioned key levels and monitoring on short time frames would be the best approach to trade this pair over the day. Although the US dollar is showing strength and this currency pair remains in a valid long-term bearish trend, bulls seem to have the advantage right now, with the price refusing to make any truly significant lows over recent days. We have continued to see buying below $1.1300. It looks like we have a new support level at $1.1315 and the price is very close to that at the time of writing. Therefore, if we get a bullish bounce here early in today's London session, this could produce a good long trade entry signal. With $1.1315 looking like a pivotal point, it could be logical to go short if the price breaks below this level. However, I think this would be dangerous. If you are taking this course, it would make more sense to wait for a bearish breakdown and then a retest of $1.1315 from below. If there is then a bearish reversal at the first retest, it would be safer to enter a short trade. It is not likely that the price will reach the nearest resistance level at $1.1394 today, but if it does, that would probably provide a great short trade entry opportunity. Gbp Usd Forex Signal, bullish pump to 1.3600 likely. The path of the least resistance for the pair is upwards, with the next level to watch being at the 61.8% retracement level at 1.3600. Bullish view. Buy the Gbp USD pair and add a take profit at 1.3600. Add a stop loss at 1.3400. Timeline, 1 to 2 days. Bearish view. Sell the Gbp USD pair and set a take profit at 1.3400. Add a stop loss at 1.3600. The Gbp USD pair crossed a key resistance level on Wednesday as investors reflected on the rising US trade deficit and weak housing data. The pair rose to a high of 1.3500, which was the highest level since November 19. It has risen by more than 2.5% from its lowest level in December. US deficit and housing data. The Gbp USD jumped because of the broad US dollar sell-off. The jump was mostly because of the relatively weak economic numbers from the United States. On Wednesday, data by the Commerce Department showed that the US trade deficit widened to more than $97 billion in November. This was a 17% increase and the highest level on record. That happened as the country imported goods worth more than $252 billion. Its exports declined by about 1.2% to $154 billion. The trends in imports are mostly because of increased purchases ahead of the holiday season. Indeed, data published by MasterCard showed that the country's holiday sales jumped by 8% this year. The Gbp Usd pair also rose after data showed that some weakness was emerging in the housing sector. On Tuesday, data revealed that home prices declined for 3 straight months to October. And on Wednesday, numbers showed that pending home sales declined by 2.2% in November after they rose by 7.5% in the previous month. Still, in all, the real estate sector did well in 2020, helped by low interest rates and inventories. The pair also rose as investors reflected on the ongoing Omicron trends. While the number of cases has increased recently, the symptoms are relatively mild. As such, there is a possibility that the economy will continue reopening. Later today, the Gbp Usd pair will react to the latest house price index from the UK and initial jobless claims data from the US. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a strong bullish trend in the past few days. Along the way, the pair has managed to rise above the 38.2% Fibonacci retracement level. It has also risen above the 25-day and 50-day moving averages, while oscillators like the Relative Strength Index and MACD have pointed upwards. Therefore, the path of the least resistance for the pair is upwards, with the next level to watch being at the 61.8% retracement level at 1.3600. Aud Usd Forex Signal, more gains ahead. The path of the least resistance for the pair is to the upside. Bullish view. Buy the Aud USD and set a take profit at 0.7340. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7220 and a take profit at 0.7150. Add a stop loss at 0.7300. The AUD USD pair tested a key resistance level on Wednesday as the US dollar weakened. The pair rose to an intraday high of 0.7270, which was the highest level since November 22. It has risen by about 3.7% from its lowest level this month. US dollar weakness. The AUD USD pair rose mostly because of the overall dollar weakness. The US dollar index fell by about 50 basis points on Tuesday after the latest economic data from the United States. Data published by the American government revealed that the country's trade imbalance increased in November. Total exports declined by more than 1% while imports surged ahead of the holiday shopping period. As a result, the country reported a record trade deficit of more than $97 billion. Additional data from the United States showed that the country's pending home sales numbers declined by about 2.2% last month. This was a bigger decline than the previous month's increase of more than 7.7%. Other data published this month showed that new home sales and housing starts improved modestly in November. Still, these numbers and the Omicron variant will likely not change the Federal Reserve outlook. In its most recent meeting, the Fed said that it will implement about 3 rate hikes next year. Some analysts believe that the bank will increase rates by about 100 basis points. Later today, the AUD USD will react mildly to the latest initial jobless numbers from the US. Economists expect the data to show that initial claims increased from 205K to 208K. They also expect the data to show that the existing claims rose from 1,859K to 1,868K. These numbers have made strong progress considering that the US had more than 10 million initial claims at the onset of the pandemic. AUD USD Forecast. The 4-hour chart shows that the AUD USD pair formed an ascending channel this month. And on Wednesday, the pair managed to move to the upper side of this channel. It also moved slightly below the 50% Fibonacci retracement level. At the same time, the pair moved slightly above the 25-day moving averages while the relative strength index, RSI, is tilting higher. It has also formed a bullish flag pattern. Therefore, the path of the least resistance for the pair is to the upside. If this append, the next key level to watch will be the 61.8% Fibonacci retracement level at 0.7340.